listeners, traders, investors. Today, it's my pleasure to introduce you, and I get to meet Graham Summers for the first time. And looking forward to our discussion today, Graham. There's so much going on that we'll try and get it in 30 minutes. But welcome to TradeGate Hub, buddy.
Oh, thank you so much. It's a pleasure to be here.
All right, so Graham is the chief market strategist for Phoenix Capital Research, and he has an MBA. And did you get your MBA at Duke?
Yes, that's correct.
Oh, okay, so you got to see a lot of basketball, a lot of great basketball back
There you
then, huh?
go. Yeah,
All right, so let's get in a time machine and
sure.
take you back. Maybe it even happened to you before college.
hmm
What first attracted you to the financial markets, and it ended up being something that you wanted to pursue? Uh,
Sure. So I was hired straight out of school by an investment research house that was in Baltimore, Maryland at the time. And they hired me as a junior analyst specifically to focus on insider trading or the transactions being made by corporate insiders.
okay,
And from
cool.
there, I turned out to be, I had a very voracious sort of appetite for these sorts of things. I suddenly realized that we were dealing with what might be the greatest puzzle there is, which is
Yeah,
constantly, it's like playing chess with an 800-pound gorilla. Sometimes even if you've got the right moves, it smashes you in the face. So
it's like financial Disneyland
yeah, there you go.
with a
So
bit of cage fighting in there.
yeah, there you go. So that was right up my alley. I'd had a major in English and a minor in psychology. I was fascinated by understanding how things work, for finding sort of themes and ideas and sort of developing from there. Initially, I actually wanted to be a professor, but once I got my teeth into the financial markets, that dream just went out the window. I mean, it was so much more exciting and fascinating than reading texts. I've always loved literature. I've always, loved reading, but to me, it's a lot more exciting every day getting up and sort of looking at a game that's constantly changing, in which there's always something you can sort of be digging into. And so I worked my way up the food chain there at the investment house. I was there about 5 years. I was the youngest senior analyst in the history of the firm. And when I was in my mid to late 20s, I just I had a very entrepreneurial sort of bend on things. I'd always been sort of very self-driven. So I actually uh, just decided, I'm not married. I don't have a house. I don't have any, huge sort of things hanging over my head. Why don't I just take a calculated risk and see how this goes? So I left that place, founded my first company in 2008. And that was actually when
Good year.
yeah, sorry.
Good. That was a good year.
Yeah, well, I actually made a name for myself with that because I didn't have any, there, as my own boss, there was no one limiting what I could talk about. And so
Right.
throughout the summer and spring of 2008, after Bear Stearns failed, we had this kind of parade of Wall Street CEOs coming out saying our balance sheets are rock solid, everything, the worst is behind us. And I was digging more and more into that situation. I was saying, no, this is, I was on record as early as April of 2008 saying there's going to be a financial crisis and crash this fall. Like this derivatives problem is
Yeah.
completely not being accounted for. And so I ended up making a name for myself as one of the, people who called the crash. I had clients in all cash before Lehman went under. We were shorting the market
Nice.
all the way down. And so that sort of is what put me on the map. And from there, the business took off. I'd made a name for myself, but I just, I was cranking. I wasn't sleeping. I was working around the clock trying to help people navigate this just insane situation that we were in. And so I've
Yeah.
been doing that now for clients since 2008. We've had a lot of success. And, looking back, I wouldn't change anything. I'm actually glad I started my company in '08. I'm glad, I went through that school of hard knocks. It's really what, really paved the way for me having the confidence and the resilience and the grit to really stand by my own forecast as opposed to sort of towing the line.
Okay. So let me ask you.
Sure.
It reminded me. My first trade was on the floor of the CME. A broker did a gold trade for me. It's when it became legal to own again at
Right.
200. So I'm
Okay.
dating myself. You're a young man.
No worries.
To me, and so came out at 200
hmm
and broke to 100, and I got short gold. And sometimes your big successes and the side of the market that you're on ends up at times making giving you that type of paradigm
hmm
that's hard to fight off and be able to flip and be bullish. I'm
Yeah.
a Gemini and I'm schizophrenic, so I could be long or short the
Yeah.
same day, the same day.
Yeah.
So, but it did give me a proclivity to really do well in bear markets
Mhm.
because in the mid 70s, that's what we had in the middle of a recession.
Right.
Stocks weren't going anywhere.
Right.
We had some bull markets and commodities,
Mhm.
but, down it's faster.
Right.
So,
Yeah. So
except in the last 3 months.
yeah, so it really changed for me as well. So that experience of calling a crisis and making a name for myself, that definitely sort of shaped me as being more negative. I mean, the balance I think in the financial markets is, ultimately your goal is making money. And
Yeah,
you're really trading as yourself. And you have to know yourself well, and you have to understand your own biases. So I did extraordinarily well the first, I'd say, 3, 4 years with the company, especially because we had the '08 crash, then we had the EU crisis with the debt
right.
markets in
Yeah,
2011,
Greece.
2012.
Right.
And then starting in 2013, 2014, we had the beginning of this just kind of bull market that's had few and far blips in between. We obviously
Yeah.
had the pandemic, we've had bear markets in there. And so you're absolutely correct. You have to know yourself. You have to be willing to pivot. I was definitely probably too bearish at different times, and other times I've been too bullish. And I mean, that's the name of the game. I tell people, if you want to be in the financial markets and you don't think you're going to lose money, that's like saying I want to become a boxer and I don't get punched in the face. I mean,
You know
it's
what? That's exactly the metaphor that I use all the time. You can't get in the ring without taking a hit.
That's right. That's right. And
Yeah,
some of the greatest traders in the world, their win rate, I mean, it really depends on who are you. You might have a very high win rate, but you're not necessarily making a ton of money with your wins. You might have a very low win rate, but when you're right, you make a bundle. I mean,
exactly.
there's a million ways to skin a cat. There's a million ways to trade the markets. What really matters is finding out what works for you. And so that's involved, as a chief market strategist, I've got to dance to sort of the tune the devil's playing. You might say AI is looking frothy, but until it actually starts breaking down, you're not doing anyone favors to tell them to start shorting. So
Well,
it's
I did for a few days here with NVIDIA in the
yeah,
semis.
yeah, yeah. We've
Okay,
done
I mean, just for a correction, I'm not looking for a crash here, but
no, that's fine.
what I'd like to start digging into is what's happening now.
Sure.
And I went through your stream, and you said that the inflation numbers, and I know one of them was above expectations, but
Yes.
under the hood, there's trouble. So
Yes.
that leads me to September with the Fed, which is
Right.
you're a Fed watcher.
Yeah, that's right.
All right, so with that in mind, with the inflation numbers that we just had, is the market going to be disappointed in September and not get the cut that they have baked in?
Yeah, so I actually just put out a note to clients last week. I think we're in for a really confusing month or so. And the reason I say that is because so many things have changed, and it's trying to, you're always trying to navigate a lot of moving parts, but in the last month a lot has changed that have made known knowns unknown. One example of that is the Bureau of Labor Statistics. As I'm
Oh
sure
yeah,
no doubt aware, Trump fired the head, he put in a new person. So that suddenly raises this specter of, is that data going to be accurate? It obviously was not that accurate to begin with, and the BLS has a terrible track record, but now, like, are investors going to, are they going to digest any positive number as being overstated because Trump's putting tremendous political pressure on the BLS
yeah.
to produce good numbers? The other
What do you believe now, Graham?
exactly, that's what can you believe? And you have the same
You
thing.
know what? I think we could believe the candlesticks.
Yeah, that's what I'm a market guy myself primarily. I always
Yeah,
tell clients, I have my framework I'm working with, but I got to throw it out the window sometimes because what I think doesn't matter. What matters is what the market thinks.
exactly.
And the market can think crazy things for a long time because the market's an amalgamation of all the thoughts and actions of people, and people can be extremely irrational. So, in terms of September, the other problem is we've got the Trump administration and the Fed at each other's throats. And the Trump administration is, it's one thing for the president to kind of be berating the Fed. It's another thing to say, well, you know what, I'm going to file an actual federal lawsuit against you if you don't cut rates in September based on this, renovation work you're doing on your headquarters in DC. So it's a very confusing situation to be in. And what I've told clients is, we really need to be ready and willing to understand it's going to be messier than usual. Investing is always messy, but I think we're going to have a lot of chop. We're going to have a lot of trends called into question. As I'm sure you've noticed, the AI trade's been taking it on the chin
Yeah,
lately. We're starting
Palantir.
to see some reports that suggest AI is not going to be nearly as successful as initially thought. If this driving theme for the markets is this belief that AI is going to translate to profits and revenues right away, and then you've got MIT coming out and saying, well, wait a minute, 95% of generative AI attempts to integrate with a company are failing to even
Wow.
significantly change revenues. I mean, you're going to have these kind of chops. My view is we're in a sort of longer term bull market, that the April low was a major low, but you can't just go straight up ad infinitum. We're obviously going to have a pullback. I think a pullback starting now, primarily in the AI space. And then, provided that we don't get any sort of upsets in the economy, like a recession or something, I think we'll continue to see stocks grind their way higher to the end of the year.
Okay, would you consider yourself both technical and fundies? What do you put more emphasis on? And did you have any mentors when it came to trading markets,
Yes.
and that was a big influence on you? Who
Yes,
would
I've
that be?
I've had a couple of mentors at different times. One guy that really shaped my thinking was a gentleman named Bill King. He runs a company he writes the King Report. It's a daily institutional investment research piece. I think he does a really fantastic job of encapsulating everything from political to societal to financial to economic data points into kind of coherent thoughts. And that really changed my thinking. It really, I met Bill when I was a young man in my mid 20s, and that really shaped sort of my way of thinking of things in terms of being independent, being a contrarian. In terms of the financial markets, I do fundamental macro analysis because fundamentally, the economy is what's going to drive stocks for the most part because that's what produces profits and cash flow. But
Right.
the issue with macroeconomics is that it's such a complicated analysis. A lot of people think, well, I take my GDP number, I take my inflation number, I plug those into my model, and that tells me what's going to happen. And the reality is, GDP has a different meaning at different times. At any given time, the market is digesting trillions of pieces of information, but there might be just one or two things it's really focusing on. And so I incorporate macro, fundamental analysis, economic analysis, but then I also look at technicals for setups because the market, as you were saying, it's showing candlesticks are showing you what people are actually doing with their money. And
Yeah.
so when it comes time to make entry points, when it comes time to actually pull the trigger, I use a lot of charts as my kind of guide.
Okay. So April's a major low in your
Yes,
view, and we could
yes,
have corrections, like perhaps we're starting one now.
yes,
Do you have upside targets for the market? Because I'm interested in, I believe we are in the everything bubble.
yes,
So for this bubble to continue, do we need the dollar not to bottom here
yeah,
and to sell off again? Because I know I read that you also do currencies. You're
yes.
interested in currencies. What's your view on the dollar? Are we in a bottoming process in the dollar? Or are we going to lose reserve currency status tonight at midnight?
Well, I actually coined the term the everything bubble back in 2014. Not a lot of people know
Yeah.
that, but I coined
Oh,
that term and then I wrote the book in 2017. And
wow.
um, you know, in terms of, you asked me a lot of really great questions just now. The dollar, let's start with that. So the dollar, as you know, had one of its worst starts to a year since 1973. We're
Yeah.
down 12%. Obviously nothing goes straight up or straight down, but if you look at the very long-term chart of the dollar, the 20-year chart, you can see that it's at a major, major trend line. So
Yeah.
it needs to hold if you're not going to start entering a more sort of secular long-term bear market in the dollar. My view is that the Trump administration has essentially figured out that austerity is impossible and that the only way they can possibly keep the sort of song playing is to run the economy hot to the
Okay.
point of potentially risking a resurgence in inflation, which gets back to the point you made earlier about the inflation data. It looks tame on the surface, but if you look in the components, like what actually comprises the consumer price index of the personal consumption expenditures, the inflationary pressures are actually broadening. Previously you had inflationary pressures confined to one or two areas, specifically
Yeah.
shelter, which comprises a third of CPI. But if you look in the components now in core CPI and CPI itself, you'll see that more and more and more of the components are starting to turn back up. And in point of fact, the Fed's own research shows that CPI and PCE are actually terrible predictors of future inflation. They did a research report back in 2002 where they actually analyzed a bunch of different metrics. They found that food inflation was the single best predictor of future inflation. Well, food prices are turning up very aggressively right now.
And you know what, Graham? I'm so glad you brought it up.
Yeah,
I'm sure you don't mind that we make it a conversation
sure.
instead of just, questions. But the
Yeah.
weakest part of the commodities sector since the war in Ukraine started are
Hmm.
the grains.
Yeah.
Okay, and so look how tame they've been.
Yes.
And there's all kinds of signs that they're starting to turn. There's
Hmm.
wheat, beans look like they're turning.
Yes.
So I've seen bull markets in grains, and you know
Mhm.
what? You can't eat gold.
No.
So yeah, people ask me why do you even watch the grains? First of all, they're good technical markets.
Yeah.
Second of all, I think it's going to play a role geopolitically too with what's
Agreed.
happening with food.
Agreed.
So how long? So getting back to the Fed, do they
Yeah.
cut? And should they really be talking about because of what you're seeing with inflation turning up? Actually, be talking about a hike,
Yeah, that's a great question. I think that they're likely to start cutting more than hiking. I think that if they were potentially just looking strictly at the data, then the case is there for them to do nothing and watch and wait. I just think they're under such tremendous political pressure that they're probably going to act sooner rather than later. Um, the Fed's become very confusing for a lot of people because, the idea is that the Fed's politically independent, which is obviously a fairy tale. It's never been politically independent, but the political bias hasn't been as egregiously explicit as it's been under the Trump administration. The Fed does this jumbo rate cut of 0.5% within 60 days of the 2024 election, and then turns around after Trump wins and says, "Oh, well, we're not raising rates anymore, cutting rates anymore because there's too much economic uncertainty." I mean, how can you possibly claim there's more economic uncertainty now than there was before the election in 2024? Depending on who won, you were going to have a
right?
completely different agenda from the White House.
Right.
So the Fed really kind of screwed itself in its credibility with the way it handled things. And now it's becoming increasingly under political pressure from the Trump administration. In terms
So
of
what does Paul do?
what I
We
think,
we we know about all the noise
yeah,
and all the heat he's taking
yeah.
from adding. I don't know how he is tolerating it.
Yeah, I think
Uh,
he'll probably cut in September and then watch and wait. Um,
okay.
but it really depends on how the market reacts.
Look how the market's reacting while we're having this interview right now.
Yeah.
We're down 70 handles. Any
Yep.
news break? Maybe it's a Fed minutes.
No, I think what's happening is that, well, the Fed has Jackson Hole this week, but I believe
Right.
the big information comes out with Powell on Friday. I think what's happening is that the markets got really out over their skis in terms of growth and, growth numbers, specifically in the AI trade. You've
Right.
got companies like Palantir and others that are trading at just obscene valuations. Now, obviously, when you're in a bubble, the bubble can go much longer than people expect. But the problem with having such high valuations based on such astronomical growth numbers is that if even a slight hiccup occurs, you get a really sharp sell-off in momentum. And that's what's happened is, the momentum plays all took it on the chin the last couple days.
Yeah.
And it might have been due to that MIT report I mentioned
Yeah.
earlier. We've also seen a couple of big statements from AI insiders. Sam Altman from OpenAI came out and said that he believes it's in a bubble, that AI is similar to like what the tech bubble was. We have Meta, formerly Facebook, which was one of the biggest poachers of AI talent because Mark Zuckerberg's really trying to sort of become the market leader in AI. They
Looks
just
ugly.
announced that they're going to reshuffle their AI team and potentially do some layoffs,
Yeah.
which is very concerning because if you're writing, eight-figure checks to steal talent from, Alphabet and Apple, and then within 2 months you're suddenly pivoting and say, well, we got to reconciliate how we're doing this. I think we might be finding that the AI story is a little bit too far out over its skis, and so we're going to have to take some of the froth out of those names.
Well,
But
they're doing it.
yep,
It's a Wile E. Coyote chart all
there
over
you
the
go.
place. Okay,
Yeah, and
so
yeah,
okay, so we're in a correction then, Graham.
yes, it seems that way.
Should
Yeah.
it be contained? Let's say the S&Ps contain this pullback,
Yes.
say to the prior high at 6140 back here.
That's
Is this
about
a
right. I
uh,
think we're going to see a retest of the former high,
yeah, okay.
or at least a retest of like, just testing the 50-day moving average. The
Yeah, that's
reality is, nothing goes straight up or straight down. Stocks have gone almost straight up for 3, 4
yeah,
months. We're up
yeah,
30% from the April lows. So
yeah.
I think this is just a technical pullback. I think maybe the AI story, a hiccup in that story is the excuse for it. But, provided the economy doesn't roll over into recession, we don't get any sort of exogenous events, I think it will be contained and we'll be off to the races, come September.
Okay. Is 7,500 S&Ps within your range on, do you have a feel for duration
Yeah,
of
sure.
this bull market? How much longer do you think this bull market's going to last? And then I want your ideas on what you think is going to prick the everything bubble and send us into your second book, The
Sure.
Abyss.
Yeah, so the I was actually calling for 6,500 on the S&P back in 2022 during the bear market. We've hit
Yeah,
that. I
we have.
upgraded that to 7,000 once we got the AI story coming in, just because things always go further than people believe.
Yeah.
At that point, it's very hard to tell because I'm not trying to dodge the question, but there's just so many moving pieces that are changing that really are affecting the way I'm looking at this. Because, if you just simply said, okay, the Fed's going to start easing, the economy's growing, the Trump administration wants to run the economy hot, and you have the AI story, well, that opens the door to just obscene numbers. I mean, who knows? But if you're starting to see some issues in the labor market, which we're seeing, you start to see inflation perking back up. You see the Fed, potentially not willing to play ball and cut rates, then it becomes more questionable. I still think we're likely to see 7,000, but I reserve the right to change that next week if I,
Every.
as you know.
And you know what? When you don't have conviction, it's okay to say I don't know.
I don't know.
People choke on those words, Graham. They choke on I don't know, and
Yep.
I was wrong.
Yep.
Okay, and I've interviewed Schwager
Hmm.
several times, and all the wizards were wrong.
Yep. All the
And
time.
not about and their biggest mistakes were not about being wrong, but about not having stops and good risk management because
Yeah.
they all blew up.
Yeah.
So it's okay to say I don't know. Nice divergence here.
Yeah.
This could be healthy, right?
Yeah, I knew very clearly in mid to late April that we were at the beginning of a big run.
Okay.
I thought in July, starting in early July, I thought we'd have what would happen now, what is happening now. But instead, we had that 1 day downdraft, and then the bulls came in aggressively and started buying in early August, and we went off to the races to new highs. So what's happening now, I kind of thought was going to come a few weeks ago. My view is that it's a technical pullback, probably to 6,000 or so, maybe
Yeah.
6,100. But if we slice through that, it depends on how the selling comes. I'm in sort of watch and wait mode. We took off a lot of longs when go in middle to end of July. We locked in a lot of profits because we thought, as you know, sometimes the best way to play a big change is if you got divide a move into eighths. You skip the first eighth, you catch the middle six, and then the last eighth you miss as well because you get out too early potentially. So we got
Right.
out mostly in July. We've got some longs still. But we've been mostly expecting a pullback and looking to allocate capital aggressively around the 6,000 to 6,100, around where the former all-time highs were, somewhere in that ballpark.
Okay. And your view on the dollar? Bullish or bearish, the
I think that
dollar?
I think the dollar's probably going to bounce here. You can see that chart to me looks like it's ready for a move higher. As I mentioned before, on the long-term 20-year chart of the dollar, it's at a major trend line. I don't
Yeah.
expect it to go through that trend line right away. I would expect us to have a bounce. And a strong dollar is usually correlated to the stocks taking it on the chin. So maybe that's the explanation. I don't know. But the charts to me suggest the dollar is going to rally and we'll see a pullback in risk assets, including stocks.
Okay. Would that include precious metals and miners?
So yes and no. There are some miners that are big laggers in this move that are starting to catch,
The
flight.
bid? Yeah.
Yeah, but I think that precious metals, as you can see, they're consolidating. Uh,
Okay, I want to ask you that's what everyone says. Okay,
yeah,
look at that daily gold chart. We've
yeah,
been moving pretty much sideways since April,
yeah.
and the ranges are compressing. But how do you know it's consolidation and not distribution?
That's a great question. Well, my view is that when you look at gold, not just in dollar terms, but if gold is
Okay,
near all-time highs priced in everything from euros to yen
every
to Fran-
fiat.
yeah.
Yeah.
And so my view is we're in a secular bull market in gold, and this is a consolidation before the next leg higher. Um, I think that the financial system has figured out that there's no way forward that doesn't involve more money printing
Okay.
and that nobody has the cojones to actually implement anything resembling austerity from a
Oh,
macro policy perspective. If you look at European Central Bank, they've already cut rates 8 times.
right.
Bank of England, they've cut it five. Swiss National Bank's taken rates to zero already. The only
Yeah.
holdouts are the Bank of Japan and the US Fed in terms of easing aggressively right now. So my view is we're going to enter a coordinated sort of monetary easing globally in the next 3 to 6 months, and that's going to be what ignites gold to new highs.
Okay, and the market.
Yeah.
And the everything bubble
Yes.
continues, including crypto and
Yeah. Yeah.
basically it's all one trade. That's what the everything bubble is.
That's right.
And so tell me what pops a bubble, Graham.
I'm pausing because I honestly don't know.
That's
Um,
okay.
People have been concerned about the debt markets for decades. A good
Yeah,
friend of mine is Ron Paul, and I
yeah,
know he's been worried about debt for, a
yeah.
long, long, long time. And yet here, we hit 10 trillion in debt. That seemed ridiculous. Then we hit 20, then 30, now we're at 37. We'll hit 40 within the next 12 months. It's hard to tell when that finally turns. My my overall view is that they're likely going to try and inflate their way out of that mess, which means that in nominal terms, risk assets go to sort of astonishing highs, but purchasing power in currencies diminishes dramatically. The dollar's lost like almost a third of its purchasing power since '08 when we started this kind of cycle of QE and zero interest rate policy. So I think that's likely to be the game plan. But in terms of what breaks it, it's so,
Isn't that going to take time
yeah,
for the transmission? So could we, before that happens, or even while the Fed might start to ease,
right.
have a period where everything's for sale, a liquidity type crisis,
Yeah,
and people sell the kitchen sink to raise cash.
that's quite possible. It's for predicting that stuff, I look at the charts.
Yeah.
Um, that sort of the macro and the fundamentals is where my head's at in the framework I'm in, so that kind of helps me determine things like are we going to see a correction or is this the beginning of a bear market, that kind of thing. But in terms of the actual trigger, I'd be looking for, specific movements in charts. One chart that interests me a lot is high.
I think this is a trigger.
Yep, that's a very important one for sure. Another one I like to watch is high yield credit.
Okay.
They tend to be very finicky. That's kind of the canary in the coal mine for debt markets. So, provided that's doing well, that suggests that there's risk appetite for debt. And so, consequently, things will stay relatively strong. But,
Well, maybe that's changed, Graham,
yep,
because maybe the confidence is in sovereigns.
it's possible.
That the issue, because people are willing to get less for junk
Mhm.
than they are for what used to be the flight to quality,
That's
sovereigns.
true. That's true. And, Trump proudly proclaims he's the king of cheap debt. and he wants to run the economy hot. He doesn't want to, their idea is that they're somehow going to grow their way out of the debt to GDP. The deficit was actually bigger in July than it was under Biden, despite all the tariff revenue. I mean, these guys are spending obscene amounts of money, so it's not surprising that the long end of the bond market's not catching a bid. There's very little appetite for duration, and in fact, the worst market for that is in Japan.
Yeah.
Japan's starting to find the long end of their bond market is just freezing up. So I don't know. Maybe that's it. Maybe the Bank of Japan finally loses control of their bond market. The yen carry trade blows up. I don't know.
Well, I mean, the UK already did with their
Yep.
gilt moment.
Yep. There you
I
go.
mean, their yields are outpacing us, and the pound's not doing great
Yep.
against the dollar. So I mean, this is the best with inflation coming down, our bond market could do. Uh, you know, Maybe we have a bond crash. So most people are saying this is a base.
Yeah.
Would you be buying bonds?
No, I don't like long duration at all. Not when the Trump administration is trying to do
Okay.
what it's doing with debt. I think I think the Fed's going to be forced to implement yield curve control or some kind of QE in the next 12 months, just by
Yeah.
virtue of the fact duration's such a problem.
Yeah.
But yeah, I mean, it's very interesting the Trump pivot. When they first came in, they said, we're going to balance the budget, we're going to use Doge, we're
Yeah.
going to cut spending, we're going to do all these things. And then the trade war, they just completely buckled and reversed course and just started running the deficit hot again. And they're now trying to issue just as much short-term debt as the Biden administration was. So that was quite a pivot. Um, how that plays out remains to be seen, but it's definitely not what they initially promised.
Forget pivots, put it on a swivel.
There you go. There you go.
Anyway, so Graham, it was great meeting you, and best idea for the fall.
Are we talking asset class?
Anything. Yeah, any an opportunity that you're stalking right now that you might
I'm
get involved in after the
so
adults get back from the Hamptons.
yeah, I'm really getting interested in healthcare. Healthcare's valuations are such extraordinary lows. I mean, we're in a market where everything's overvalued right now. So healthcare is interesting to me.
Give
Uh,
me a symbol.
UNH is one that
Oh, that's right. Buffett went in
yeah,
there, right?
ELV. Um, a lot of, what actually has been getting my attention is corporate insiders. We've had a lot of downside surprises in companies like United Health Group, Elevance, that's a health insurer, Align Technology, they're the Invisalign company, the teeth, dental work company.
Yeah.
A lot of them had really bad collapses in their stocks, and the insiders rushed in and were buying millions of dollars worth of stock. So that caught my interest because if you consider the fact those companies are trading at at decade lows in terms of valuations, and the insiders are buying to the tune of millions, I mean, that's something that really catches my attention as opposed to some of these tech plays where, like Nvidia, the insiders are just selling the farm. Now, that's
Uh,
not to say that Nvidia is a terrible idea. It's just from a valuation perspective and, seeing management align their capital with, shareholder equity, that is more interesting to me, healthcare per se.
okay, life after the bubble.
Yeah.
What's it going to be like, Mad Max?
Yeah, that was actually, I wrote that about the pandemic.
Oh,
When
I
I wrote
see.
the everything bubble, everyone was asking me, well, that's great. How do you invest based on it?
Yeah.
And I said, well, I didn't really know at the time because the question was, is the next crisis going to be like 2008 or is it going to be inflationary? And then we had the pandemic where we voluntarily shut down the economy and engaged in this like nuclear quantitative easing, monetary easing. They
Yeah.
printed, the Fed printed 3 trillion between '08 and 2015. They printed 5 trillion in 6 months in 2020. So
You
when
would
that
think they'd
happened,
run out of ink.
yeah, so the view I had, and that's why I wrote Into the Abyss, was I feel like the pandemic, because it was so fast, most crises take like months to unfold. The pandemic, it was like, peak to trough was like 6 weeks. I think it was so violent and so aggressive, it forced the Fed to show their entire playbook for what they think. And what it revealed was they really don't know how to do anything but print money and buy assets. Like that's all they know how to do. And consequently, that suggests to me that basically whatever happens, it's going to be print more money and use it to buy assets, try to shape the bond market, sort of like what Japan's done.
Yield control?
I'm
Yield
sorry.
curve, yield curve control
Yep,
coming.
all that stuff. That's all they know how to. They have no idea how to create economic growth. They have no idea how to create jobs. All they know how to do is print money, funnel it into the financial system, and
Sounds
that's
like what do we need the Fed for then?
yeah, exactly,
Do you
exactly.
feel that
I
way?
mean, you probably would have a better financial system if we just followed the yield on the 2-year Treasury and there was no Fed Board of Governors. But that's not the world we live in, unfortunately.
Well, I'd like to nominate you for one of the positions on the Fed, Graham.
I would be
I,
happy. I would be delighted to get there, but like Ron Paul says, I'd probably just want to shut it down. I don't think I'd actually do a good job.
All
You know?
right. Well, I hope you and your subscribers, and this is where people could find you, Graham, besides on X at Graham Summers MBA, but go to phoenixcapitalresearch.com. Do you have, is it a newsletter that people can
Yeah.
subscribe to?
So I have three products. One is long-term alpha. That's specifically for people who are long-term buy and hold stock pickers.
Okay.
Private Wealth Advisory is a stock and ETF trading service that's much more oriented to swing trading. And
Okay.
then I have a back end service called Insider Options. That's day trading and weekly trading options based on insider transactions. Specifically, we look for setups where insiders are buying a company that have a compelling trade setup, and then we use options for additional juice. So
Oh,
that's
do you look for option sweeps to confirm that idea?
I also look at options flow. That's one of the
Uh,
tools in the toolkit. Yes, absolutely.
okay. Graham's a pro. I knew after 5 minutes. So, Graham, really hope you and your subscribers have a great rest of the summer. And like to talk to you again as things progress. And really was great meeting you and hearing your story. And there's one thing that happens after you survive all my interruptions
Okay.
during an interview. You're
Yeah.
now my trading warrior brother.
Oh, sounds good to me. I'm honored. Thank you.
My new trading warrior brother, Graham Summers. Follow him. Check him out. This guy, you could tell after 5 minutes if someone knows what they're talking about. So, thanks for your time and edifying our community, buddy.
Thank you so much. That's very kind. God
Uh,
bless.
all right. God bless, Graham. All right, everyone. That's a wrap. Have a great day. You know, uh, I'm not going to take any victory laps. It was a victory being able to talk to a guy like Graham today. So, good hunting. Don't just count your pips, count your blessings. And I'll see everyone in the room. Adios. Thanks